This is a trade recap for Thursday, March 26th, 2026. First day of phase 3 of one and done. Going to do it for 10 sessions, and we're using 3 to 5 contracts up from 2 to 4. Just a quick update on that. So far it's going obviously good, but this is the first one. So let's see how it really goes over the next few rounds. I'm trying to think what else. All in all, pretty standard day. Nothing crazy in the markets that I can think really happened. Did have a bit of a gap down this morning, which again, you have to make some adjustments for that potentially, depending on exactly what's going on. But all in all, yeah, it was a fairly normal morning. Let's go ahead and kind of get into that. But again, it's one of those things when you have these tumultuous times, or again, kind of the markets that we've had where we've needed to demonstrate more patience and kind of pick things apart. This is where having a coach and mentor really, really pays off. Because again, someone that is really, really good at this, like Pat Mitchell, who I learned from over at Trick Trades, he has this down to a science, and he's been doing it for over a decade. So having his insights and kind of having him dissect things and explain it to us, I mean, was that worth you? I mean, that's, again, and that's the daily thing. So if you are interested in, again, finding a coach or mentor because you're new to this or you're struggling with it, again, go over to tricktrades.com, read up on him. That's the best thing you can do. Like I said, he's been in the markets for over a decade. He does this on a professional level, and he demonstrates it literally every single day, which is probably more than anyone I know of that out there that claims to be, a coach or a guru or whatever and charges people for it. And if you kind of want a sampling of the information he puts out there, again, head over to his YouTube page. He has over 1,700 videos on there at this point. It is a treasure trove of knowledge. Now, scraping through all this, that's going to take you a serious amount of time and effort, and to put that all together yourself, if you can even do it. So honestly, I would say you can save yourself a lot of time and money, probably just coming and learning directly from him. But with that being said, let's go ahead and get into it. So here's the recording from the live session. If you're new here, kind of how we do things. We only trade SPY and Qs. SPY is this chart or the ticker on the top. Qs is the ticker on the bottom. These charts here on the left are your daily charts. So these are daily candles. The charts here in the middle are the 1 minute intraday. And then I keep my order execution here on the right. I just like it all on one monitor. Just keeps everything kind of within view. Very simple, very easy for me. These blue levels you see here on the daily chart, Pat develops our trade plans every morning. In fact, he starts the night before a trade session. Starts seeing what's going on in the futures market and figuring out what levels might be in play to get us started. And then he refines them the morning of, once we have kind of, again, get closer to that next trading session. Once he sets these levels, they do not move. They are static. They do not get altered after the fact. If you're doing that, you don't have a trade plan. You're just flying by the seat of your pants. On here, you also see these risk levels. I put those on there myself because I just like a visual cue of where my risk is or what I'm risking off of. So with that being said, you can kind of see we gap down. We're opening between these two levels on SPY, these two levels on Qs. So we're going to see kind of which triggers first to give us our trades. Let's go ahead and hit play. It's about 10 seconds before the open. And I will probably step through this just to work through it a little bit faster. That way we don't have to do it second by second. So as we can see, we're going to open up. We take this dump. And as Pat had explained to us this morning and the time before, that when you get these gap downs, especially below certain levels, you're going to see pops or these, again, volatile kind of reactions in the morning. And those are stops being triggered because they don't trigger like pre or post market. So on that, we took that dump down, decided to, again, go into Qs long there with one due to the risk, the volatility, potentially the price of the premium, which actually wasn't that bad. Got to size down initially just to kind of see how this plays. It triggers, just wait to see if we get a follow through. Kind of just farts around for a little bit, try to figure out what it wants. Pops up, and again, that's that first reaction. That's what you're looking for. So at that point in time, you have to pay yourself, and that's exactly what I did. So took one off there. Now, because of how it's interacting and stuff like that, it's like, oh, I got that one in. So, well, I did pull that off. The trade's technically not done yet. Just kind of waiting to see how it interacts here and see if there's a potential additional opportunity for more follow through. Because normally, say you didn't get that first reaction, you'd be adding in and correcting your average at the appropriate points. That way, again, you can do that. So that's what, again, kind of the theme is, again, build the, again, position appropriately, use the appropriate size for the conditions, for the risk and all of that. But at the same time, you need, again, growing more accustomed to building a position, not just getting a starter in. So went ahead, added one back there. Again, that would have been my add if that first reaction hadn't happened. So just going to let it kind of, again, speed it up here. See, again, do we get more of that follow through? Start to. Then I took, again, that one off. So, and that point, again, practice building the position, practice paying myself. And again, it's one of those things where that's kind of what you need to be doing, especially if you're building a small account like I am. Stepping through this, you can kind of see, like, what does this ultimately do? Well, ultimately it comes up, down, and then kind of starts putting a lower low. So again, are we going to get more follow through to the downside? We do. Question is, again, it came through the risk line a little bit where I had drawn it, but it didn't confirm lower. So that's technically where you would add heavy if you were still trading this. At that point in time, I decided, no, that's not done. Essentially the trade, the one trade that I'm allowed. So, and that trade was green. So again, no reset trades, no, again, not overworking this position. But yeah, again, and if you did that, even on this reaction right here, that would have been enough to kind of get back into a green or flat point, depending on exactly how you added and averaged in based upon where you started. So right back into the level. And then through the level. Nice squeeze. Definitely would have been green and paying yourself. All right, now into the chart itself, pull my entries. As you can see, there are the two entries there. Again, single contract trades. Normal. See, it came down at a level, executed that initially, paid on the reaction, re-entered on that kind of confirmation, paid on the reaction. And that's where I basically called my trade. And then what you can see, it came down into the risk level, but didn't like break and confirm lower, didn't confirm weakness. And again, you could have added an average there if you were still working the position. And then as it comes back up into the level and kind of that resistance, would have paid there, majority, and held small to still kind of follow through. And as you can see, there was a massive amount of follow through, which is really, again, it doesn't really get much simpler than that. As you can see, SPY, again, really didn't trigger the long at all. It wasn't even close enough. Came up, didn't, again, a little bit of reaction right in this level and above it, kind of broke above. So that one's hard to actually take a trade off of, potentially if you're still building that small account. But again, if you had a larger account, had more risk tolerance, you can see it does work out. And that's just SPY though, because if you actually look at Qs though, it came up, broke past, and reacted. So again, that's completely valid trade there. Did it again, did again, did again. And then in this one, kind of started breaking down, did that one final kind of like death pop, and then just sold off. So it didn't even actually hit the risk level. So again, there's no reason to jump out of these trades. So that's why it's one of the reasons, like, respect your levels, respect your risk. Again, the trade plan, the strategy, like, you got to do all that. Because if you don't, again, it's just going to kind of blow up in your face. And you don't want to be a bag holder. So all in all, good day. Key theme, again, is patience, it seems, for some of these trades, because that's what we've been dealing with the past couple of weeks. And that's kind of just given the nature of the market. But all in all, if you want to really learn how to do this, this is why having someone like Pat as a coach and mentor really makes a difference. So if you want to learn, check out the service at tricktrades.com. If you're thinking about joining, check the description below. I can save you a little bit of money on your first month there. So you can give it a shot, see whether or not, again, is what you're expecting and fits you. If not, all good. And we will catch everyone tomorrow for the next one. Have a good one.